Good evening, this is Ken at Tortoise Capital on Halloween for 2018. Happy birthday to my brother Joe. In the distribution of the daily report, I made the following comment that this is an important prep day in which the price action indicates the first significant intermediate turning point being established across a number of our indicators. And I'm prepared, therefore, for a decisive large range day tomorrow with evidence about directionality from this potential turning point. And some folks asked me to comment on that. So we'll just take a quick look at the report that was sent out tonight on Halloween. So looking at the first thing I look at is the market health check. I notice, okay, so we got 50 days of look back. We're below the 200 period moving average, more than 2%, so we're in bear. We'll see later that this is volatile. The slope of the 30 regression line is down. The slope of the 10 is down. We're probably 10% off the top at least, so that's a significant pullback that's getting people's attention. In the baby dragon here, I see one leg support, two legs down, and then a swing low. 2 days of improvement. This would actually kind of be a washout entry right in here. I see one dot on the PSAR, so the PSAR has flipped after almost probably 20 days of downward pressure. This is the first day. So 2 dots on the PSAR look like the eyes of the dragon telling you better be alert. So 1 dot means better be prepared. I'm noticing in the MACD histogram that the signal line is well below the 0 line, so we're deep in the winter. We flirted with crossing into spring here, but the additional selling pressure in here keeps it below the spring, but you can see this flattening out at an extreme condition. The width of the red river here tells you just how extreme that move has been, and so a spring move back to the 0 line would allow for a move back to the Bollinger Band mean and the RL270, which we treat as the long-term fair value. So there's a considerable move available. It was a low range day today. It gapped up, had some upward pressure, sold off towards the end, but it still closed higher than yesterday's high, and the gap is still in place. And so that creates a very important potential turning point. This almost has doji-like qualities. So if actually I should zoom this in a little bit so you can see. So this support level here around 270 looks to be really critical. And if this can hold, then a swing low below the RL10 or the belly of the baby dragon becomes an important support level, and could even use this as a position sizing stop down here. Certainly an execution stop, that if it fails below this swing low, then it's look out below. And even the 2-day low looks like look out below, a crossing of the baby dragon or a violation of that RL10. So this looks like a potential turning point. Large potential move still baked into the cake from both directions on a small range day. That is the very definition of a max pain range compression. So that's from the market health check. So we have bearish volatile, meaning increased probability of a large range move tomorrow. We have the 10-day NDX right smack in the middle of the 10-day period. The annual is in the low end of neutral. We have this harsh sell-off here in the risk Z, but it's had 1 and 2 potential legs up, so volatility is coming around. Strong bearish ADX pressure, but 45.3 is so strong of a downward trend that it's hard for the market to sustain that, and so conversely that suggests a potential upside, and there's still plenty of room in the spring of risk Z to move up. The 10-day min pain are the ones that have sold off the least. These are the ones that have suffered the most. And so things like Morgan, Merck, McDonald's, Coke, and Johnson & Johnson become important targets for continued support, because you think if the market's going to resume and leaders continue to lead, then these are the ones that are ideally positioned. Johnson & Johnson and Merck have been very strong leaders. Defensive plays, large caps, and healthcare and staples sector, great candidates for potential resumption. The big winners today in the green shade, you can see plenty of reward to risks that look favorable in the auto framer. Handful of dojis, no other real patterns to speak of. So that's why I call it a quiet inside day, not an inside day, but a small range prep day. The ones that sold off harshly here, and then the ones that were gaining. So things like Caterpillar, DuPont, Microsoft, Goldman, Cisco, Apple, all potential big movers. In the ETFs, things like Mexico draws my attention, being at the bottom of its NDX over many time frames. Had huge losses lately, but not so much today, so a potential for a rebound. There has been strength in Brazil and Latin America, so EWW is always on my short list for intraday trading and swing trading, because it's a frog champion, and when it's at the top of the list, that's one of my go-to plays. Technology strong, metals and mining strong. That's not surprising given DuPont, so I would be looking to set up metals and mining and DuPont and Caterpillar. If all that looks good and it's better than the market, and if the market's up, then that quickly gets my attention. The defensive plays, like utilities, suffered. The VIX suffered today. So some gains are certainly underway. The most positive Z stretches, these are the ones that are the highest numbers above their Bollinger Band mean, the middle of the river. So again, Coke, Procter, McDonald's, Brazil, all look interesting. There's Merck. This is how many standard deviations that stretch represents, and then you can see the negative stretches. So many, more than 2 sigma stretched below. That's how harsh and sharp that sell-off has been prior to the midterm elections. And so there's DuPont, and again, it's stretched so far that you have to start thinking that's potentially an overreaction. So you got Mexico, oil, Caterpillar, DuPont, Home Depot, energy, U.S. mid-caps, and even all the U.S. indices. So stretched below. All of those feel like overreactions, or maybe reposturing prior to the election outcomes, building some room for people to begin buying new positions. The most expanded pinch boxes are the ones that have the greatest width of the river. You saw how volatile and how wide those Bollinger Bands had gotten. These are the strongest longer-term 30-day kinds of moves. That's how you get very wide Bollinger Bands. So notice you got mid-caps and small caps in here. And that suggests there's some powerful index buying and selling. And I think those are now postured for a potential rebound. The most compressed pinch boxes, these are the ones where indecision is at a max and volatility is least. And so they are well postured to break out in either direction. So you got Merck, Apple, Johnson & Johnson, Disney, Walmart, Pfizer. Those are all starting to posture for that kind of a breakout move. The auto framer showing all the mechanical one-day trade frames. We had a lot more things in the winter last week this time, and now the leaders have moved into the spring. Not surprising. Morgan, Nike, Intel, Home Depot. There's a nice an early turn. It's still early in the spring. These things in the summer are where the real leaders have been. They are above their MACD histogram 0 line. They are in this posture after the winter, then the spring. They cross the 0 line, are now in the summer. So that's going to be those key leaders now that are no-brainers if they're gaining tomorrow. Johnson & Johnson, Merck, Coke, McDonald's, Walmart. That's a really good place to be when you're trying to select from among a population of the Dow members after a harsh sell-off where the market itself is in the winter, and then you look at some of these components that are already crossed up into the summer. That's the way you identify relative strength leaders. Strength of trends using ADX14 compared to the last 500 days. These are the ones that have these extraordinarily strong trends. So DuPont is a Z-score of 3.5 sigma. His ADX reading is 50. That tells you just how strong that adverse trend has been. So that becomes a quality candidate. Nike, Cat, Procter, again, these are all very strong directional trends, so you can put them on your short list for potential response moves. So these are some of the indicators that I was talking about that indicate potential turning points. This is the first price move above the parabolic regression line slope. So there's the straight line 30-period regression line slope, and that's important. The parabolic gives you some indications of potential turning. You can see that already starting to turn. Failure to fail further after a big range day that recovered, a higher low, a gap up that held. That's that potential hook, and you can see its effect on the parabolic regression line slope. You can see that in this time series that the RL30 has gotten almost 3 sigma away from the long-term average and the zero line, and is now starting to turn, and in a couple days can cross its own 10-period moving average, and that is a confirmation of a potential turning point. You can see the 180-day look back, just the extent of that move and how harsh it was compared to the last couple pullbacks. And then compared to the 200, you can see we got below the zero line, and here's one big leg down, first attempt, second big leg down, this is the second attempt. So if that's 2 legs, that puts us at a really important turning point at a 2 sigma stretch below compared to the long-term average. And now that generates potential for a nice upside move. You can see this is the second worst RL slope stretch in the last 10 years, and that was followed, this one, by a very strong upward move. You see how extraordinary the volatility spikes have been, but it's already starting to recover, and that's how you get into the spring in risk Z. Now, when we're looking at the Z-scores of the 10, 30, and 90, you can see that this was that first leg down and a leg up, rejected, second leg down, and now this is that second leg up effort. It didn't get as bad the second time, and now the 30, which is 4 sigma below the long-term average, is now starting to curl. This is almost creating like an owl kind of a pattern when the 30 has now turned up, and you still got a nice long move back to the mean. And the longer-term trend is still in place. This overheated upward grinding bullish move here, which took the 90 up to a +1 sigma, and then it's just now back to the long-term average. And so this is that's what a 10% correction looks like. Yeah, it brought it all the way back in here, but the last time it got here, that triggered a bunch of consistent buying pressure in the key and emerging leaders of the market back here. A lot of that was that healthcare, and so we now are interested, therefore, in saying who are the leaders that are stemming this tide and going to be postured for the next move up, especially if we get Democrats taking the House and you get gridlock. That's very favorable for business as usual, and so you want to see who the new early leaders are. So that's what I want to say about some of these turning points based on these indicators we have, and why, as both a swing trader looking to catch those turning points, and as a day trader looking to find those leaders who are going to lead the way and have expanded directional moves intraday, that makes this a very important turning point. And that's the basis of the note that I sent out, and why I want to be very prepared tomorrow as potentially a follow-through day. If it fails, then that's a signal of return to the third leg down, and now there's another 5 to 10% downside available to 245, because we're at this critical support level already around 258, and if that breaks, there's another one of these legs down, and that makes this a really important turning point. So if it fails, this looks like a pocket in the same way that this was a pocket, and a turning point here led to a nice second leg down. You're either going to get one of those, or you're going to get a grinding resumption. So we're going to watch to see what happens in here. Does this support level hold? And is this going to rejoin where the river was, the Bollinger Band mean, back up in here. So that's what we're going to be looking out for, and that's why today is a special day to be well prepared for tomorrow. So thanks for your kind attention.